Alright guys, so I'm in a trade here on NZD USD. I can see it looks like it's rejecting this order block over here. You can see by the wick over here on this 15-minute bearish candle. So if I'm wrong on this trade, I want to be wrong early. So you can see I've got my stop loss set just above the wick. So my risk I've set at 1%. What I've been doing lately is I've been setting my risk always at 1% or at the max 1.5. 90% of my trades are at 1%, just so it's a consistent number. Now you can see if I'm wrong on this trade, I want to be wrong quickly. And then this is an actual setup because it's reacting to that order block. So I'm always looking for actual setups, not like random trades. Because I know that if this setup doesn't work, I'll lose 1%, and then on the next setup, it's more than likely that I'll make that back and more, because it's an actual proper setup that I'm looking for. See, that's the difference between taking random trades and actually waiting for proper setups. I know that if I get another setup similar to this, I'll easily make this back. So what will happen is, if I don't make a nice 1 to 2 or 1 to 3 on this trade, and if it is a loss, I definitely know I'll make that 1R back on the next setup, and then I can push from there. I can go for that leap forward or that gain on the account on the following trade. So what I like to do is, if I take a loss, then on the next trade I like to just recover and then make the leap forward. So I like to get back to what I was on, like break even on the next trade, and then I'll push for that leap forward. It's very rare that I'll take 2 losses in a row, because I'm trading a very consistent setup. So I'll say, for example, I'll lose 1R, then I'll make it back, then on the next trade I'll make 2R, then maybe on the next trade I'll lose, then the following trade I'll make it back, and then the following trade I'll make the 2R, and that'll be that leap forward again. So price is starting to move a little bit in my favor here. Now if I'm risking 1% and I'm looking for 2%, what does that mean? That means I need 5 trades, 5 winners to make 10%. Alright, so I can do that over a period of about 2 weeks. I can easily make 10% over about 2 weeks, because that divides it. That makes it about 2 or 3 trades a week I need to take. So that on a monthly basis, we're looking at about 20% a month. So we're looking at about 3 months with the compounding effect to double the account. So you must have a plan when you're taking in your trading. So you must break it down. Look at your percentage risk, look at your percentage gain that you want to make, look at the risk reward ratio that you need, and just break it down into a realistic plan. So with this, I know I'm going to make about 10% or even more every 2 weeks by doing this, and that will mean I'll be able to double an account every 2.5 to 3 months. Then in 1 year, that means I can double about 3 accounts in 1 year. So that's basically my plan and how I've broken things down. So it's very important to break things down and have an actual plan. So you need a systemized strategy, number one. Your strategy has to be, your whole system has to be systemized. So the strategy, you have to look for an actual proper setup each time. Take breaks in between trades and wait for that proper setup. Then you need to have a set percentage risk, like 1% or 2% max. If your account's small, you could probably risk 2%, but I like to risk anywhere between 1 and 1.5%. And then have a fixed risk to reward ratio that you're looking for. But you can tinker around with that a little bit. But everything must be set in stone, so that it's a consistent setup, a consistent risk. Well, consistent risk that you're taking, and a consistent reward. Then you'll know roughly where you'll be heading with your trading plan in order to reach those goals. Alright guys, so I've just quickly taken you over to my MT4 PC because I just want to show you how the trade's working out and also show you how my risk EA that I use to calculate my risk. So you can see the trade's working out. It's currently at basically a 1-to-1. But with this risk EA, it's this one here in the bottom corner over here. You can see here I'm risking 1%. So in here you can set your risk allocation, 1%, 2%, 5% or whatever. But here I'm risking 1%. Again, I'm just going to show you how it works, because this will allow you to really dial in on your risk, because this calculates your risk and your lot size. So you can see here it calculated my lot size at 0.12 for this trade. You can see here if I lose, I'll lose 1% of the account, which is $10. But you can see here if it hits my 2-to-1 profit target, I'll make $21.80. I can tinker that around because it's a little bit more than a 2-to-1, so I'll just set it exactly on a 2-to-1, somewhere around there, because I'm risking here 5, just over 5. Oh no, that's 4.9 pips. So should be okay. That's exactly right over there. So you can see, I'll just show you how this risk calculator works. So let's just say we wanted to enter a buy down here on this level here. So you'll just tap P. So let's say we saw this nice bar over here. This was a nice setup for us. So then we decided to enter here. So we'll tap P, then we'll put our line over there for our entry. Then we'll set our stop loss just below the low. And we'll set our take profit at a 2-to-1, which is roughly about here. Right, or then all we'll do is we'll click on trade. Alright, now you'll see the pending order here is down here. So this EA only works for pending orders, for buy stops and for buy limits, sell stops and sell limits. Now you can see over here it's calculated our lot size at 0.11 for this trade. Just if we were going to take this trade, risking, it set our risk at $10.75. Okay, and I've put it at a 2-to-1, so it's going to be roughly about $20. Okay, so it sets your TP, your stop loss, and your entry level. The main thing is, the reason why I'm emphasizing this is it's really important to have your trading systemized and also your risk calculated for you. Instead of you guessing your lot size, you can use this simple EA over here. So you can use a simple EA like this, okay, and you can have your risk calculated for you at 1% for every single trade that you take, or 2%, whatever your risk tolerance is. So this will take the emotion out of your trading. If you know you're risking 1% on a $1,000 account, you know that it's going to be $10. Alright, now 1%, to lose 1% on your account is, just going to close that, takes the emotion out of your trading. When you start risking 2%, 3%, 4%, that's when the emotions start to kick in. If you're risking 1% or 1.5%, then it keeps the emotions really, really low in your trading. So that's why when you start to trade higher capital, like 50k accounts, 100k accounts, let's just say you're trading a 50k account and you set it at 1%, it's going to be $500. But you know, okay, to lose $500 is quite emotional. It will be a little bit emotional, but if you know it's 1% of your account, then it should take the emotions out of it, because you know it's only 1% of your whole account. See, that's where the key difference is. So practicing using this on a small account and transitioning into a bigger account. Okay, once you've say made 50% or even doubled your small account using set risk, and you having your whole trading strategy systemized, and as I say, using a solid strategy like the one that I'm teaching you here over the last few videos, having set risk at 1%, set take profits at 2-to-1 or 1.5-to-1, and once you've doubled the small account, then there's no reason why you can't double a much bigger account, or make consistent profits on a much bigger account using the same, because it's going to be the same setups. The only difference is you're looking at it from a percentage perspective. So it's very important to look at your account from a percentage perspective, especially your risk and your gains as well. But it takes the emotion out of trading. If you know that your strategy is good, everything's pretty much systemized, and you know that you're risking 1%, it's going to take the emotion out of your trading, because everything is just basically, it's just a numbers game. But doing well in a small account, using set risk, using a set strategy, and really dialing down. This is something that I stopped using, and so I've gone back to it now, and I'm using it on every single trade, because it's really something that I previously used to use, and I consistently used it, and it really was a game changer for me, and it really made me profitable because I was so dialed in on my risk, and it took the emotions out of the losses, because so many people get emotional when they lose, but it's because they don't have their risk calculated properly. They just take random lot sizes on their trades, and they don't even know if it's 1%, 5%. So I hope this video helped, guys. Let's see how this trade plays out anyway, and I'll catch you later.